What's going on? Welcome back to the channel. So today I want to talk to you about M&T. They just had their Q1 earnings. I'm going to go over some of the absolute key highlights from the earnings that you need to take away from it all, what analysts are saying, and everything else you need to know. But first, make sure to hit that thumbs up, and with that, let's get right to it. Time of doing this video, it is sitting at $160 and change. Earnings was on the 14th, and they did miss on earnings per share as well as revenue. I'll give future guidance near the end of the video, but for face value, it kind of was on the timid side only because it did go up 0.35%. Implied move was 6.24% leading into the earnings. So I think the Wall Street's consensus was that it might have been possibly a miss. But even leading into the earnings, 1 week, 3 days, and 1 day was all green. And I think a lot of that was attributed to just macro conditions, tariffs, and so forth. Same goes for shorts. I usually like to analyze what shorts do leading into an earnings, but given the current market circumstances that we're in, it's you kind of have to take all of that with a grain of salt. Just for clarity, M&T isn't a squeeze play. I just like to bring this up for analysis purposes, but 1.83% of the free float's being shorted. Recent low was 1.41. That was on April the 7th. So shorts did really increase quite a lot since then, but again, I think a lot of that could be associated to just macro conditions. From the options, you are seeing the bulls for it to be roughly around that 175 range for the high, and then the bears for it to be sub 140. So a lot of volatility is anticipated based on all of this. Right now with it now at 161, it is trading between this S2 and this S3. So 165 is going to be the next strong target size resistance, followed by 170. Flip side, 156 is going to be a strong support, and it didn't touch that yesterday, so clearly the market seeing obviously their earnings as fairly optimistic. So again, just kind of take note of some of the strong support and resistance points. As far as ratings, there's only been 4 that did come out. We did have a couple that was posted today, so 220. And then also 200, that was done by Barclays, KBW, analyst ratings 57% and 60. And then aside from that, you had a couple that came out yesterday, 189 and then 200. So not any crazy new high ones, but as a consensus, $201 is that price target, representing a 26.83% upside, insinuating that Wall Street sees it as a pretty good deal, all in all. So let me know your general thoughts on that. Side note, if you do want access to all these analyst ratings, forecasts, ownership, everything that you ever need, take a look at IBKR, link in the description below and also the comments for all of it to be completely free. But with that said, let's get right to their future guidance.
M&T Bank outlines 2025 targets with focus on deposit growth and CET1 ratio management. Earnings call insights. M&T Bank Corporation, MTB Q1 2025 management view. M&T Bank Corporation reported a strong start to 2025. CFO 𝗪𝗠𝗪𝗧 highlighted an 8 basis point increase in net interest margin to 3.66%, driven by deposit cost improvements and a strong deposit franchise. Share repurchases of $662 million were completed during the quarter, as the company continues aiming towards an 11% CET1 ratio by year-end 2025. Asset quality improvements were emphasized with a reduction in commercial criticized balances by $516 million and non-accrual loans by $150 million. CFO 𝗪𝗠𝗪𝗧 noted, diluted GAAP earnings per share were $3.32, net income was $584 million, and M&T's results produced an ROA and ROC of 1.14% and 8.36%, respectively. Fee income grew by 5% year over year, excluding the previous year's BOG distribution, with specific growth in mortgage banking, service charges, and trust and brokerage fees. Outlook: M&T Bank expects taxable equivalent net interest income of $7.5 billion to $7.15 billion for 2025, with net interest margin projected to average in the mid to high 3.60s. Full-year average loan and lease balances are anticipated at $135 billion to $137 billion, with a focus on C&I, consumer, and residential mortgage growth, offset by reduced CRE balances. Average deposit balances are forecasted at $162 billion to $164 billion, with guidance indicating deposit growth at reasonable costs. Non-interest income is expected to reach the high end of the $2.5 billion to $2.6 billion range. Operating expenses are projected at $5.4 billion to $5.5 billion, reflecting continued investment in strategic projects and business opportunities. Net charge-offs are expected to remain near 40 basis points for 2025. Financial results. First quarter net interest income was $1.71 billion, a decrease of $33 million from the previous quarter, attributed to fewer days and lower average earning assets. Average loans and leases declined to $134.8 billion, with decreases in CRE balances offset by C&I and consumer loan growth. Average total deposits fell by $3.4 billion to $161.2 billion, with a focus on reducing broker deposits and maintaining non-interest-bearing deposits at 30.2% of the mix. Non-interest income was $611 million, down from $657 million in the previous quarter, reflecting non-recurring items from Q4 2024. Non-interest expenses increased to $1.42 billion, driven by seasonal factors in salaries and benefits, but efficiency ratio rose to 60.5%. Q&A. Ken Houston, Autonomous Research, inquired about deposit growth and liability management. CFO 𝗪𝗓𝗧𝗛 responded positively, noting, "We feel pretty comfortable that we'll probably be at the higher end of the deposit range." 𝗪𝗓𝗡𝗡𝗘𝗖𝗧, Bank of America, asked about customer sentiment regarding tariffs. CFO 𝗪𝗓𝗧𝗛 explained a mixed sentiment with strong spending patterns, but cautious business investment. Gerard Cassidy, RBC, raised questions about regulatory environment shifts. CFO 𝗪𝗓𝗧𝗛 emphasized, "We perform well irrespective of the administration," highlighting optimistic views on potential regulatory changes. Sentiment analysis. Analyst sentiment during the Q&A was neutral to slightly positive, reflecting cautious optimism regarding the bank's outlook. Management maintained a confident tone, emphasizing strong liquidity, capital, and asset quality improvements, as well as their ability to navigate the macroeconomic environment. Compared to Q4 2024, analysts were more focused on potential economic headwinds, while management held steady confidence in their strategic initiatives. Quarter-over-quarter comparison. Guidance for net interest income narrowed slightly compared to the prior quarter, while deposit growth expectations remained consistent. Analysts showed increased concern over macroeconomic uncertainties, evident in questions about tariff impacts and customer caution. Management continued to express confidence in achieving their CET1 ratio and strategic project completions, risks and concerns. Management highlighted uncertainties in the economic backdrop, including tariff impacts and business sentiment. Analysts questioned potential stress in CRE and C&I portfolios, with management emphasizing disciplined underwriting and selective growth. Regulatory changes were discussed, with management optimistic about tailoring and transparency improvements. Final takeaway. M&T Bank Corporation demonstrated a solid start to 2025, emphasizing improvements in asset quality, deposit management, and operational efficiency. While macroeconomic uncertainties persist, the bank's focus on liquidity, capital strength, and strategic investments positions it to navigate challenges effectively. With a targeted CET1 ratio of 11% and strategic growth in deposits and fee income, M&T Bank remains committed to delivering shareholder value.